when we look into, for example, non-Australian expats who is looking to buy a property in Australia, the rules are slightly different. So to break it down, generally we will need to look at the non-banks because the issue with that is right now most of the Australian banks they are not really taking any non-Australian for a mortgage. So we have to look at some of these non-bank lenders. We call it financial institutes in Australia that can still offer a mortgage to non-Australians who is looking to buy a property. However, there are also another options, which is some of these international banks like HSBC. So they sometimes can also offer a mortgage to non-Australians who is looking to buy a property. And probably to quickly explain the difference between these options, for example, these we call non-bank lenders in Australia, these financial institutes, they're still happy to lend you a mortgage up to 80% of the value of the property. The main difference between them is their rate is slightly higher, so potentially 1 to 2% higher than the Australian banks that can offer a mortgage. So, and obviously because they need to make a profit by offering a mortgage to non-Australians who's looking to buy. So just generally the cost will be higher, but other features like the bank, online banking login, the loan terms, locations of properties, those are pretty much similar to the banks. And obviously, if you have the options, you're capable of doing it with HSBC, then that might be a better option because they can still offer you the bank rates similar, cheaper than these non-banks, and 30 years loan term standard mortgage, like any Australian banks they can offer. So that would be the biggest difference in terms of lendings. So we'll break it down into a couple of things. First one is stamp duty. Stamp duty applies to anyone who is looking to buy in Australia. So roughly different states has different rules, but in general, it's around 5%. However, when it comes to foreign expats without any Australian PR or citizenship, you are expected to pay an additional surcharge. We call stamp duty surcharge. And again, it kind of depending on which state that you're looking to buy, every state is slightly different. But generally, it's around 7 to 8% additional surcharge on top of the 5%. So you're kind of expecting around 13, 14% of stamp duty of buying a property in Australia. Another thing you also need to take into consideration is we call it FIRB. So this stands for Foreign Investor Review Board. See it as an application for the government to look into your details and personal situation to make sure that you are a clean person, this is not money laundering, and you are not a political person, that you are capable to buy a property in Australia. And there's a fee associated with the applications, depending on the value of property that you're looking to buy. So these are really the two major expenses that you should expect in terms of cost of buying. Other things like legal fees, couple of thousands, kind of general standard fees that you can expect. So that's about the cost of buying. And then when it comes to running the property, that's some other costs you should take into account as well. For example, we talk about the council rates, the water rates. These are charged by the local councils. When to a state level, we are looking at potentially a land tax. If your property land value is over a certain amount, you might need to pay a land tax to the government. And to the federal level, we are looking at potentially the income tax. If you are buying the property for investments, you're going to get rental income. So you need to lodge and declare the income in Australia. At the end of the stage, when you are looking to either sell the property, for example, there could be a capital gains that you also need to factor in. When you sell the property, how much profit have you made, and what is the final tax that you need to pay in Australia? If you're looking to buy to live into the property, some of these costs can be exempt because you might potentially claim it as a main residence. So the rate, all these fees can be slightly reduced. Unfortunately, because of a lot of rule changes, the government has been becoming harsher and harsher when it comes to foreign investors, so foreign owners who are looking to buy property to live in the future. So a lot of these exemptions right now are only available to citizens or PR who has some sort of ties with Australia. So if you're coming purely from a foreigner perspective, you might not get much of these. So, but still, there are some sort of incentive in there. For example, if you're buying the property for investments, we have another rule we call negative gearing. That means if you are making a loss on the property, you can accumulate these losses to offset any of the future income you have in the future from the property, or if you eventually end up working in Australia. Potentially, if you are able to claim if you buy the property to live into it yourself, you can also claim some sort of exemptions. For example, the land tax exemptions, or if you are selling in the future, you're living the property as a main residence, you still can entitle to the main residence exemptions on capital gains. So you don't need to pay any capital gains when you sell eventually. So a lot of these benefits and allowance are still available to even foreigners. It really just the initial costs are slightly different compared to people in Australia. So have an expectation that probably the upfront cost will be higher, but the other benefits are still pretty much the same when it comes to available to foreigners. Of course, it kind of depending on your plan. If you're looking to buy as investment properties, slightly change. Rules might be slightly different. If you're looking to buy as a main residence to live into it yourself, a lot of these benefits are still available to you. I think the most important one is to make sure that you understand the tax implications for being, we call it non-residents for tax purpose, because when it comes to tax, we don't really look at the citizenship. Are you an Australian? Are you not Australian? What passport do you hold? It's more coming from a tax perspective, whether do you live in Australia or do you live outside of Australia to determine your tax residencies. And the reason for that is because rules are different between tax resident and non-resident. Because, for example, if you are non-residents, you start to pay tax on first dollar that you make in Australia, and you're only liable for any tax or any income you have in Australia. So whatever you're earning overseas outside Australia has nothing to do with Australia. So you don't have to worry about, oh, if I buy a property as a foreigner living overseas, do I need to pay tax on my overseas income in Australia? The quick answer is no. Unless you have a plan to go to Australia and reside there in the future, the story could be different. So really just the income that you have in Australia. So that's one thing. The other thing would be, understand the cost of buying the property and maintaining the property, what benefits that you can enjoy, and eventually what sort of capital gains tax you need to pay. But if you do have a plan to go to Australia, potentially maybe buy a property, rent it out first, and live into it yourself in the future, that could also help you to bring down some sort of tax. So these are really the two things. Make sure that you understand about being a non-resident for tax purpose. What does it mean? What sort of income are you looking to declare in Australia? And what tax rate are you paying? So Odin, we as a company, we operate in two major sector. One is Odin Mortgage and the other one is Odin Tax. And the reason for us to combine them into one offering that we do is because for people looking to buy a property, they might need a mortgage. And the next one that comes up is always the tax. What the tax may look like when you have a property in Australia. So this is why we want to make it in-house, one-stop shop for everyone. What Odin can assist is from day one, if you're looking to buy a property in Australia, we can offer you the mortgage services to let you know based on your personal situation, what options are available to you, the breakdown of the whole cost of buying the property, to get you the finance, to manage your tax going forward in Australia. So we make it one-stop shop so you don't have to worry about, I need to talk to a different person about different things. Our mission is to help people to get property and handle their tax effortlessly. So you don't really need to worry about, I need to talk to different parties. I need to manage everything myself. Everything will be done by the team, and pretty much, and most important one is there's no fee on us in terms of helping you to get a mortgage. So I think that would be the best advantage. And then really the main differentiation between us and people in Australia, or let's say other brokers, is we specializing in helping expats when it comes to foreign incomes because the policies are completely different. So if you try to talk to someone locally, they may give you a different answer, which might not be the right answer. So this is what we try to be specializing in.